All right, we back. This is Totally Capital. I'm Kenny. We're back with another video for you guys. Do me a favor real quick. Hit that like button, hit that subscribe button. Remember, support is free. Tell a friend to tell a friend. We are constantly giving you guys this information, these trades, education on chart reviews, education on software development, how to start your career in software development. So let's go. Join the Patreon, follow the Instagram, code.2.capital. Patreon is code to capital. All right. So on the Patreon this week, we called out a few trades that we like. Some are shorter term trades, some are longer term leap trades. And so let's get into it right now. So the first MU. So this is Micron Technology. So they create a lot of memory chips and software that relates to storage. And so this is a big time company. They make a lot of money and they actually got hit pretty hard here. As you can see on Friday, just like a lot of stocks did with that big, there was like a lot of bad news going on. The market took a hit as well. So this is actually a pretty good discount here on this stock. It's been running pretty high here. As you can see, ever since 2023, we went down from $64 here, ran all the way up to about 142, even 157 here. And now we're all the way back down into the 90s. And so that's what you call a discount, 150 to 90 on a great company. Yep, that's great. So we actually got into some options there. Please join the Patreon to see the exact post of the exact option that we got into. But to get into the chart here, you can see this is a simple play. Again, like I said, this is a great company on a discount. That alone, a lot of times, is a good enough reason to get into an option play with a few months out. But we also have some chart patterns here that form, one being a double bottom. So you see here, this is the daily chart we're on. Let me remove this line here so you can actually see this a little better. This is what we call a double bottom. So if you follow my mouse cursor here, you can see that looks like a W. And then the candlestick that breaks the high of that W, it is our entry, basically trigger. So after that breaks, then we're going to actually look for a retrace back down to the middle part of this W, and that's what we got here today. It actually bounced at 93.50, which was also the high of day yesterday. Yesterday, see the high was 93.65. You see the low today was 93.58. So we got right below that high and then bounced right back up. And so right when I saw that strength, I actually entered this trade and then called it out on the Patreon. So yeah, this is my quick thesis on MU. So we'll see how this goes. Hopefully it does good for us. Next stock we'll go over is UPS. So I called out this trade a couple days ago, I think yesterday. It's up about 8% right now. It was up even around 12% today, but then it dipped down here. As you see, we had a high at 113.87. That's when we were up about 12% on it. Dipped back down to 113.47. So we're still in this trade. UPS, again, another great company, strong revenue. They make money every year. And yeah, again, there's another company that we're getting on a dip. For this one, I'm going to size out into the weekly chart. So I usually look at the daily for my plays week in and week out. But every now and again, you want to zoom out into the daily on these good companies to see just how good of a discount that you're getting. So here on the weekly, you see UPS had a high of 233.72. Now it's at 113.47. So that is more than a 50% discount on a good company. It's been here for a long time, tried and true. So yeah, they got hit pretty hard on earnings last week, and as you see, we are making a rebound here. We had a low of 109.40. And now we have a bullish hammerhead candle that formed on the weekly. It was already forming when I got into this trade, but now it's really fully forming since we made a high push up today. So you can see it a little better here. I definitely like this trade. I think we can get to at least this moment of consolidation here around 119, 120. If we're lucky, we'll probably get up to these 122 to 125 area. So we'll see how this trade goes. Hopefully it works out for us. Next, we have Nvidia. So for Nvidia, we make money on Nvidia all year. We just had a trade on Nvidia last week that we made some good money on, about 22%, 20 to 22 to 25% profits on that. We were in it for like a couple days, so that's good for us. And so today I decided to get into an Nvidia Leap option. So my Nvidia Leap option is going to be, usually my options that I call out are going to be around anywhere from 2 months to 6 months out, just because that's my little sweet spot of being able to hold the option for a decent amount of time if I need to, but also getting those good gains that those closer expiration dates get. For Nvidia, though, this is really a really strong company that we did get somewhat of a discount on here. We have highs at 153. When we got in, it was about at 123 area. So yeah, we got a good $30 off of a really strong stock, probably one of the strongest companies in America, in the world, really. And depending on how this AI race goes, we have this DeepSeek news that came out. So you can see Nvidia got hit pretty hard when that DeepSeek news came out, the same drop down that we saw on MU. It's here on Nvidia, and it's going to be on a lot of those technology names just because DeepSeek really shook up things a lot. And so, but it seems like that news is starting to quiet down again. We had a strong bounce off of this strong level of support here at 113. Nice strong bounce all the way back up to 128.68 here. So we have a level of resistance here at 130, but because this is a leap option, we have January 2027 NVIDIA call options on. So we're gonna actually just hold on to this play. We're really not gonna look at this too hard or pay too much attention to it. We're always on these charts, so we're gonna know what Nvidia is doing, but we're not gonna necessarily be eyeing this option and trying to decide if we're gonna stay in and stay out. Regardless of what it does for at least the first 4 to 6 months, we're gonna just let this option do what it does, and I think it should do well for us in the long run. Um, so yeah, that's what we're in. That's Nvidia. We also called out a Lyft leap option here. So Lyft, another, I don't want to say great company per se, but it is a very well-known company. A lot of people use it. I use it sometimes when Uber's acting up or is charging too much money. So here on Lyft, we're gonna zoom out here on the weekly chart. You can see Lyft has a high of $88.60 that it hit back in IPO, which was back in March of 2019. And it hasn't sniffed that since. We've dropped down here all the way down to 1466 and then had a strong bounce up back to 4090, then fell right back down here to the 20s, then bounced right back up here to the 68, 70 area, then fell all the way back down here, eventually back down all the way to this $8 area. And we had a long period of consolidation, but this just really was not a great stock to be in. And if you were in up here, you were really hurting. But now it seems like Lyft is ready to break out. And so that's when we come back around. So we don't have any biases on companies. I didn't like Lyft to trade during this whole time, really, but now I do. So they have some good financials out. They're definitely getting better, starting to make money, and we're at a great level here of consolidation. We've been ranging from about this $20 area, from $20 to $8, and now we're starting to see higher lows here. So we actually saw higher highs at 2072, 2082. Then we saw higher lows here where we stopped. We didn't get back down to this $7 area. We stopped at 893. Really, it looks like it wanted to bounce off a 9, and it hasn't been back to 9 since. So that was a strong level of support there. So there's a lot of buying power there. And then we bounced back up to 18 area, and now we have fell back to another level of support here, where this is resistance area of $12.30. First it was a period of resistance, now it's a period of support. So looks like we're gonna bounce off of this area, and I think if we can get to this 1420 area here, we'll definitely start to see some good movement to the upside. We could even see 30s, even 40s, really. We have a leap, so we're gonna be in this for at least a year. And so yeah, let's see how this goes. This is Lyft. Next stock we'll go over is AMD. So AMD, one of the biggest semiconductor companies, of course, behind Nvidia, but they are probably second or third. And so we always like AMD here. They've been getting hit pretty hard ever since March of 2024. They saw a high of 227 and they haven't sniffed that since again. You see they've been making lower lows and lower highs down here all the way down to 107 now. So that again is another greater than 50% discount on a stock. So imagine if your favorite clothing brand or your favorite sneakers or your favorite video game or your favorite food or your favorite restaurant all of a sudden had a 50% sale on it. You would probably run to it, assuming that it's not corny now. So this is the same thing on the stock market. These stocks, these companies don't get corny unless the financials get bad, and AMD's financials are still good. They actually had a good earnings report. If we go to this daily here, it's crazy because they actually had a good earnings report. You can see earnings came in higher and revenue came in higher, but their revenue outlook did not come in higher. They actually missed that by a little bit. Also, their AI data center revenue came short a bit. And because it came up short and the market really needs to hear good news all the time, especially for these big tech companies right now, they really need to deliver strong earnings if they want to see a good price movement in their stock. If they come up short even a little bit, and honestly, even if they meet expectations and don't show, you know, some growth for the future, then that's not going to be good for the stock either. The markets are at highs, and if we're going to stay at highs and continue growing, these companies have to continue reporting strong earnings after strong earnings, quarter after quarter after quarter. If they miss on any of their fields, you're going to see a drop like this on AMD. It was actually at 120 the day they dropped the earnings because their earnings report came out after the bell rang. So the market was closed. So the next morning is where you see the actual stock price reflection. So the next morning, they went from 120 down to opening at 107. So that's a $13 drop. That's like big hit on them. They recovered a bit here, and we actually entered on this trade yesterday. And this is also a leap. And so we're going to be holding on to this trade for a while. And I might even enter more because unlike a lot of my other trades, I usually wait for a certain chart pattern to appear. But right now on AMD, because they've been getting hit so hard and we're at a level that I didn't even think we would get to again so quickly, I decided to enter in and I called it out on the Patreon as well. So yeah, we're still up in this play. We're up just about 2%, not much in that. And the Nvidia play we're also up about 7% in that. And the MU play we just got in, so we're down about 1% in that, but that's just really because of the bid and the ask spread, honestly. And same with Lyft as well. We just got into that today. And so those are the five plays that we called out this week. And so now I'm gonna go over two plays that I like that I actually missed here. So I was actually eyeing this play here, FedEx. And so if I pull over my chart here, you can see the FedEx, we actually have a strong level of support here at this 247 level. And I should have honestly been entering this trade here on this hammer candle, but I missed it. We don't catch them all, but I am waiting for a dip here on FedEx. So hopefully this candle can, hopefully we can get a candle down back to this around 247 area, 248 even. I would get a entry into. And yeah, we're not going to chase it. It looks really good here. We would have been up nicely, but we didn't get in when we should have. So that's one we missed. But we we've traded FedEx a lot in the past. You can see we have strong trend lines here for them. This is on the weekly. FedEx really trades really beautifully. The one thing that scared me was that you can see here we have a trend line where we bounce off this trend line, bounce off this trend line, bounce off this trend line. I actually traded these a few times during the course of that. And so here we actually broke past the trend line. So now we this trend line is this trend is no longer relevant now because it actually broke the trend. It was supposed to bounce back up here, but it didn't. It broke below it. So now this doesn't work anymore. So I didn't want to get in down here, but I really should have, honestly. So lesson learned. It's all good though. But that's FedEx, so I'll be looking at a dip for them, also possibly around this 243 area. Even if we get down to 235, I like them there as well. And also, if we could reclaim this trend, then I'll take it on a bullish candle there. But yeah, this is FedEx. Next, and last but not least, we have AVGO. So this is another company that I should have gotten into right here because this is actually a good entry for me. If you guys watch my videos, you know I like that bullish hammer candle on the daily. It got hit here again on that. This was on that DeepSeek news actually, where they got hit, and they've been actually recovering ever since. They had dropped down. First, they were at highs at 251. They dropped down to 196 in one day. One day, it went from a high of 249 to a low of 196. So that was a really bad day for AVGO. But they've been doing really well after that. They made a strong recovery. Now they're back at 231. They've been getting in here at about 223. And that's another one that we missed. We did catch 5 plays that we like and we're up on right now. And we did catch even more. And I even caught more this week that we already got out of. We're on like an 8 trade winning streak right now. It's been a great February. And so, yeah, but those are 2 trades right there, FDX and AVGO, that we did not get a chance to get into and that I don't want to chase. We'll be looking to get into AVGO if we get back down to 222 or this 219.50 area. And a nice candle like this right here. Yeah, this was, I should have got in here. This was nice right here. But it is what it is, you know. So we'll wait for that dip again. But yeah, that's it for the stocks that we're going to go over tonight. Again, join the Patreon, code 2 capital. We have all of the plays there. I explain the exact option that I'm in, strike price, expiration, what type of option. And we just explained on this video exactly why we got into all of those stocks. And again, all of these companies that I just went over are good companies, big companies. They're not penny stocks. They are strong companies on the stock market that are here to stay for at least the next 5 to 10 years. And so we're not gambling here. We are using technical analysis to determine a high risk to reward ratio on getting into these stocks. Again, we're on an 8 trade winning streak, so we're trying to keep it going. So again, this is Code 2 Capital. My name is Kenny. Hit that like button, hit that subscribe button if you like what you're seeing. Join the Patreon and get into these trades. Let's make this money, man. It's 2025. We're going to have a strong year. I have some goals I'm trying to hit, and I want y'all to walk them down with me. So let's go. Thanks for watching. Have a good one.